Well, good weekend all. Ira Epstein with your weekend metal market review, and this is for Friday, the 7th of October, 2022. What a day. So we get exactly what the market was looking for. I had been on here yesterday saying the market was looking for between 250,000 and 275,000 new non-farm payroll jobs. They got 263. Perfect. You would think you'd get a rally. You got what you want. Well, you crashed. Because the reality is, just because you came down from 315,000 jobs to 260, you're still adding a tremendous amount of jobs. You've got to prove you can get under 200,000 jobs and then to 150. Then, I think you start really talking the pivot. The Fed, it's like a big tanker. Once they get under that 200,000 mark and see it can stay there, then I think you start worrying or thinking or hoping that the pivot is going to happen. Do you do it with a 2 in front of it? No. You want to fight the Fed? Go ahead. I have been here consistent for months, since June, when I had my own doubts. Was I right? Because when the stock market rallied back up, I'm going, maybe I just don't know what I'm doing. In thinking the market out. The charts I felt comfortable with. I was right. You can get waves of buying, the public can take over, things happen. Do I think we're still going to get in the stock market a year-end rally? I do. I haven't changed my opinion, by the way. All right, what about the metals? Well, how do you fight if you want to own them? The Fed that's going to, November 2nd, go up in rates again. They're either going to do a 50 or a 75 point. We have two numbers coming up this week that can alter which one of those it is. You have the PCE and you have the CPI numbers. So we have two inflation numbers from business and from the regular consumer. Let's see what we get. I think they're both going to say the Fed goes 75 basis points. You've got a 92% chance at the end of the day today. And I don't make these numbers up. Go to the Fed Watch page at the CME group and you can see them yourself, that's going to happen. I don't think it's going anywhere. So what does it mean for gold? Well, gold didn't do bad. It was up 2.25%. You had a $38 gain this week. That is not bad at all. But does this look like a pattern that's bullish to you? It's a bounce in a bear market. What the market bounced off of was the 200-week average. That is what this is, with the Bollinger Band, the black line. If you don't know how to work these two together, you want to take my enhanced Bollinger Band course, go to iraepstein.com, go under the word education, you'll see the different courses that I have for you. So when you look at that, could we rally to the 18-week average? We could, but that average is going to fall in value now. Remember, what you're doing here is you're getting rid of, it's an 18-week, you're dropping back one of these numbers and replacing it with one that is lower. Well, when you do that, if we come back a week, let's go this way. Last week was 1754.70 and the week before 1765. So we got a $7, $8 drop each week. It'll stay in that. So if you're at 1746.60, my rule of thumb before the market ever opens, I'm going to be in the neighborhood of close to this 1736, but still above it. So I don't know that I'd be a willing seller at that number, because if you break 1736.40, I think you'll flub-a-dub for a while. When I look at the weekly chart, you can see what it's doing right through here, the 1736.40 level, and you see how important that is in the market there. So what I think we're going to end up being is caught between the 18 to the 200-day average. Now, if you come back and you take out this week's low, you have a new problem on the market. Then I think you're going all the way back to the 1625.70 level. If you don't do that, and you can get up to the 18-week, we open the door for the possibility of a further rally. But how could you rally $100 an ounce if the Fed's getting ready to raise rates? So I don't think that's going to be the case. I mean, there's a point in logic that you apply to it. When I look at the momentum, the downside momentum has lost. So I think you have a market that's difficult at very best right now. The gold-silver ratio, you want to own silver compared to gold. It's just telling you, do that, do that, do that. And if we look at this market, you actually have a pattern of higher lows, higher highs. Why I still left the arrows pointing down is beyond me. I thought I had fixed it, but I guess I didn't. In the copper, still a market caught. I want to use this so carefully. Between the 200-week and the 18-week average of closes. In the end, I think this market will resolve itself to the upside, but how does it do it right in front of everybody going to raise interest rates again? Here's what I mean by everybody. We are the leader of the pack. We are the leaders. Whatever our cheerleader, the head guy, Powell, does, the other banks follow. Now, we're starting to see some balk at it. Australia is balking at it. There are other banks in the world balking a little bit. I get it. But when we go up another 75 points, they're going to realize, what the heck? They got to do something, because anything they get based in dollars, they're importing tremendous inflation. And that's not going to go away when we keep boosting interest rates. I don't buy into that. In the platinum, you got back over the 18-week average, but you still have lower highs and higher lows. Nothing I could do with that. And in the dollar index, well, I'm looking for higher highs. Market hits the Bollinger Bands, backs away, comes back, and it's got an embedded reading. If you lose the embedded reading, well, then I might get a little bit interested in saying, okay, that's it for the dollar. I can buy into that at that point in time. We're not there. Could we get there? We could. Could it happen before the end of the year? It could. So just beware that eventually you're going to lose that embedded reading, and when you do, the currencies are going to get a little bump, and that could be the reason for the year-end rally in the stock market. It's a possibility. So be ready for it, okay? Now, I want to remind you all that I do my research and I want to give it away to you. I don't want your credit card. I don't want any of that. If you haven't tried my complete package of my research, my ETFs in the morning, that's the video, my futures video, my written commentaries, the special updates, let me give them to you for 2 weeks. No obligation at all on your part. You like them or you don't like them. If you like it, you'll probably subscribe. If you don't like it, okay. If you like it and you don't want to spend money, you won't subscribe. It doesn't matter. Let me put it in your hand. Do you have to read it? No. Will you? Yeah. They're addictive. You'll like what you see. Specific entry, exit. I'll be wrong. You're going to like that. I'll be right. I hope you really like that. It's going to go both ways. But you're going to see a game plan. You're going to see why it unfolds. Unlike just getting a piece of paper, buy here, sell there. That's not what I'm doing. I'm giving you and showing you the whole thing so you can watch it unfold yourself. How do you get it? You go to our website under free offers. It's right there. Or just follow me. Move your cursor anywhere up here, and an icon will appear. Click on it, and away you go. I'm Ira Epstein. Take advantage. I'll see you later.